Welcome back again. So this is the London session on Wednesday, 28th of November, 2024. Not the one London session silver bullet, but this is just the London session time. I think it's about earlier than the London session time. Let me check the exact time it is right now. Okay, it's just the opening. Like this is midnight now. This is 12:45 a.m. So back on the daily time frame, during my top down analysis, for those who watch it, most of all this level, I won't be saying that you can watch it to understand. But the new levels added are this. This is added just today. I added it, and this one also on the 4 hour time frame. So this is the British pound. Now we'll say during our analysis. So yeah, before I continue, there can be some noise in the background. So just tend to focus on my voice. I think my voice should be dominating others. So be prepared for that. But just glean the information here. I want to tell you my insight. How so it will not be like usually on Friday or Sunday or Saturday, whatever I do the analysis after market closes. This time around, I'm going to give you insight. Okay, this is how you navigate the market. If you'll be a buyer, you sit still, or you be a seller. So this is the cost creation encroachment of this week we used on Friday. We can see I told you what I said about it. Let me take away the price line so I can. Okay, so this is a week. It's Friday's week of square encryption. I told you for high probability setup, we shouldn't see closure be above it. So yesterday we didn't close, it's okay. But sorry, Monday we didn't close, it's okay. Tuesday closed above it. Tuesday closing price here. Look at top left corner OHCL. Open high, low, and close. Close is 1.26816. And this price line is 1.26809. So that actually closed above it. So this is just what 896. Why this is 809, right? So that actually close above it. So what does it tell me? It tells me that it's probable that we'll see Friday's high get taken out, which is Friday's high here, and it might draw for London actually. So that's the high I'm watching for London at 1.26973. Now, how will you know if you'll be selling short or not? I told you it's an immediate rebalance, and I told you if it's real, like I said it over and over and over and again. Like I said, weekly used immediate. It was just on the daily. It's actually daily. Let me see the weekly. So it's daily. So it's daily actually. So let me correct it here before I just proceed with anything. Daily. So it's a daily immediate rebalance right here. So it's a bearish one. It has been used. And I say if it's a real immediate rebalance, it shouldn't get a second repricing. Why? Because an immediate rebalance is a strong array. Yeah, a lot of them I will just talk about the immediate rebalance for the length of this video, not be too long. It's a strong array that once price touches, it should act like a trampoline to send price higher. Like if you ball bounce on the ground, it should bounce up first, not twice bounce. Like well, there can be exception, but normal. If it bounces once, it should keep going. If you bounce on a trampoline, you shouldn't be expecting like you'll be rebouncing the second time before you go higher. Once you bounce, you go higher. You might not go as high as one, but at least the first bounce is gonna repel you. So this is just like that trampoline effect. So I said if it's a real one, like the concept behind unreal, let's say you have a friend and you just probably you got a colleague and you say, bro, I just saw your dad in Lamborghini. Like, are you for real? Your dad is a CEO. You didn't tell me which company does he work for. Like, are you for real? Like, is this true or are you joking? So I tell the immediate rebalance, like, are you for real? Are you really an immediate rebalance or you're just joking? What will make it be a real one or a joker is if it gets a secondary pricing, it's a joker. If it doesn't get, it's a real one. And the caveat is, well, it can get a secondary pricing like I've seen before, and it will still act well. But with experience, it's a secondary pricing for a strong PDRA like a immediate rebalance lessens the probability for it actually sustaining price move in that direction, which is outside. Now, once this high gets taken out and this inefficiency gets, if it I'm allowing for this inefficiency low, it can come in there. But I still don't want this high, but it can still do that. But now the best of the best is this high should get taken out, permitted to this inefficiency is low. This inefficiency is what I'm talking about. It's a weekly inefficiency. So on that thumbnail analysis, you can watch the video if you want to know more. If it entered here, I want to see it reject. Now, why will I be confident to take long? When is this tail? This is Tuesdays. The Tuesday's tail consequent encroachment. Look at that. I said Thursday. Why did I say Thursday? It's Tuesday. Tuesday. Problem already time traveling. Tuesday's tail consequent encroachment. So that's the midpoint of Tuesday's tail at 1.26459. So for there to be a run, like a lower price run, that's for there to be a sell side delivery. So just I don't want to do the correction, it's gonna take more time. So for there to be a sell side delivery, that's a run lower. It's even there. So for there to be a run lower, higher time frame body must close below here. And when I say higher time frame body, I'm talking about the 4-hour and the daily time frame. So once it's closed below here, then you may have probability of taking out Tuesday's low, Monday's low, and then Friday's low, and gravitate to the level outlined. This inefficiency and levels are outlined on that video. But in as much price is not willing to do that overlaying, then you might not see a sustained run lower. Then the 4-hour time frame, the new array added here is this balanced price range. So this balanced price range is an order flow determinant, and on the D that's the dollar index, we actually used the order flow determinant and a time, and it delivered beautifully well. This was an order flow determinant. Look at it here. Order flow determinant, monthly CB if overlapped, then buy side will be sustained. And you can see it got overlapped, and what happened? Buy side had been sustained for 1, 2, and this is the third week. Well, the same approach is going to be what I'll be applying to the British pound, which is this is an immediate rebalance this time around. So what makes it an immediate rebalance? Sorry, this is a balanced price range this time around. What makes it a balanced price range? The fact that this is sell side delivery here, this is a void of buy side, and buy side was offered here. So this is balanced price range. And if you go to lower time frames, you'll be seeing it. Remember, this is 1.26459. This is the Tuesday's week cost and encroachment we just talked about now on the daily time frame. So to avoid confusion, and this is the buy side, which is Friday's high. And I say it's okay, it's permissible. London might go there. It's fine. It's fine. But I should just let the levels on there, since it doesn't seem to. This one I won't let. I'll just make the price line available. So that's no, I don't like this price line. But this level is on. So that's what I'm looking at. This is the inefficiency, remember. So it's permissible for the inefficiency to drop price to it and it will reject. But for this guy, I wouldn't vouch for this. It can, but that lessens the probability. So you won't want to be going short in that instance. You'll be like, okay, probably will be a long opportunity. And so that's that for the British pound. And you can see more reasons why it's a balanced price range. You can see here back and forth, it went down. Okay, the only inefficiency was this one, and it was what offered buy side delivery. This inefficiency was void of buy side delivery, and it was given here. So this is a balanced price range. It was used here 1 p.m. for a PM. It will be better on the 15 minutes time frame. The PM run, yesterday was a high resistance liquidity run. Look here, we're at 7 a.m. 8:30. Look at how prices in. Normally it should have violated, like gyrated fast, but look at this is a high resistance liquidity run. So this is a condition that most of all arrays will fail. All concept, most things will just be nonsense. It won't work well. So that is a condition you want to avoid trading in. We expand here at 11:30. It was still not running well, but here at 1 p.m. Tuesday, that's yesterday, it came in down here, took out the sell side and into that little inefficiency of the 1 hour time frame, and it just rallied few about 16, 10, 15 pips, and it keep going. So for it to go this far, I think this high should want to drop price. This that buy side I told you on the since the daily time frame, that's Friday's high. So that's it. Remember the inefficiency, that blue one was this one I showed you on the 1 hour time frame. The only inefficiency here, which was the difference between this candle's low and this candle's high, this one was only sell side delivery and buy side delivery was offer. But the 4 hour, which is the big let's say a larger view, a macro view, is this balanced price range here. So the consequent encroachment is about 0.5, like 60, that's 1.260, sorry, 1.26605. That's the midpoint there, the consequent encroachment. So, and for a balanced price range to remain valid, the consequent encroachment should not see a body closure below it. It could trade because weeks, it could trade below it, but it should not close on a higher time frame below it in the body closure. So if this balanced price range, this is the final takeaway now, if this balanced price range gets disrespected, that is overlapped to the downside, then you anticipate what this week I told you on the daily. You anticipate the daily tail of Tuesday to get overlapped by hourly 4 hour time frame. If you see that on the hourly, then that's a plus, but you wait for a 4 hour candle to really close below this. Then if you close below it, you might see this low. If this low gets taken out real well, then you might see other lows and all those things. But that balance price range is something very important once it gets overlapped first. So I'm like, normally it would have just been this that will be there. So you have to wait for this to get overlapped. But now this is a BC. So if it gets overlapped, it should act as a what? Resistance, not support. So if this is acting as a support, then price might want to keep going higher. But if it acts and feels like a resistance, coupled to this balanced price range, just this balanced price range, how would I draw it? Difference between this high, use the highest high and the lowest low. So between this high and this high, this one and this low, this was the lowest low. This high and this candle's low and this candle's low, this one was higher, so you use it, and this one was just the one then you use it. So it's just like this look like a CB, normal CB that was used as an inversion to support price higher. So if it comes down here and it gets violated, then you'll be anticipating it to close below this, and definitely sell side liquidity might be drawing for sell side liquidity lies here, just below here. And also, this area I spoke about it on my analysis and everything. If you want to know more, go check it out. It's there. Top down analysis for this current week, November. What is this current week date? November 18th, November 17th. So you can check it on my channel there. So on the European dollar, I'll be faster here. So this video will be very quick. It's still the same approach. So let me zoom in. So looking closely, you should be used to it by now. But before I proceed, before the week opened, the week was actually this was Friday. This was Friday's week was going. I told you for high probability sell side delivery, it shouldn't get overlapped, and Monday right there overlap. And I said it that the European dollar is in that video. I told the European dollar has a higher probability of a deeper retracement compared to the British pound. Why? Because the European dollar has been dropping so far throughout the month faster than the British pound, and therefore the British pound will want to catch up with what the European dollar has been doing, like a six sister approach, and therefore it will want to even move faster. And you can see the retracement here is it's not so much, like it didn't even overlap this until today, but on the European dollar it overlaps its Friday's week consequent encroachment right on Monday. It open overlapped it. So now what are we looking for? The new level added now is this, and this high is Monday's high. It was outlined before, or since yesterday I've been watching it for a potential rate. This level is 50% of previous week's range. How to get that, I did that on that video. You can check it out, it's there. And if you want to know about it, it's there. So this is 50% of previous week's range, and this is the tail of Tuesday consequent increment. So the same narrative I said Thursday again. Oh man. Well, if you know it's Tuesday, so Tuesday is still consequent encroachment. So that's the midpoint of Tuesday still. So they have to be run lower by higher time frame, but the 4-hour or daily time frame. Now, if that happens, that will be when you'll be seeing, okay, once that gets overlaid by a body, then you might see Tuesday's low get taken out, then Friday's low can get taken out, Thursday's low, and probably this low, the sell side security, and then we might even gravitate to our draw liquidity outlined all in that video. So these are the things that we'll still keep if you want to go short, because I'm not trying to arm wrestle anything. It's high risk liquidity run. You can see it backs and forth. How many inefficiency do you see here? No inefficiency. Like from here, no inefficiency. There was this, I don't know if this will be an inefficiency, it just formed, but no inefficiency from this very candle down to this. Look at that. For good 24 hours, that's from 5 p.m., which is 17 within 24 hours, 17 o'clock, that's 5 p.m. to 5 p.m. No inefficiency, a whole 24-hour window. Can you see that? So that's high liquidity run for you, and that's what I'm looking at. This, like, hey, you can see our body close below here. So I want to see it happen here, just something like this here. If it happened, then this low might get taken out. If this low gets taken out, then this low might get taken out. If this low gets taken out and body fail to close below the encroachment of this week, that's if it closes above here, like it gets taken and the body rejects so much, you might have to wait for more information, because that could be run on the short-term low and send it higher. Now, when we all this get completely invalidated, like okay, I think there's an array that somebody might want to question. Let me talk very quickly about it. This array that looks green on the daily time frame. This array was actually spoke about on my. So let me just give a tip, and then let me just tell you, go and check yourself. Usually it should be that. So this is daily CBC, short-term premium. If this gets overlapped to a higher premium, then higher premium will be called for. That's what I said before this week open. So it gets overlapped. So higher premium might be called for as it gets overlapped. But if price begins to fall lower, what will make you know that okay, this was just retraced to premium and will be going back lower? These things I told you, if it gets overlapped, that's when you know. But if this fails to get overlap and it doesn't really get traded to, then be expecting premium price. This 50% of previous week's range. So you watch that very closely also. You might just touch it and keep going lower again. It's very important you watch that in price. So that's this level. So this level also, just like that balance price range, if body close below it, you want to see it act as a resistance to send price lower. If it does that, then it's fine. But if it keeps asking support to send price higher, then you just sit still. Or if you have enough information and price is fluid and it's working well, you might do some scalp long or whatever intraday volatility. But for just someone that you don't have so much information, you just wait for more information for price. You don't have to chase price. Next week is the end, next year, next month. So this is a 60-minute CB. And you can see price has been failing to close above the consequent encroachment. It's very good. I like that. Price might still pop above. So this is a red line here. It's 50% of previous switch range, just like that of the British pound I showed you. So this 50% of previous switch range, I should even extend it because it might have gotten a reprice too. The level is at 6121. Let's make it 300. No, not yet. This hasn't done it. So why this might still get to do it, then you expect the British pound to want to do, that's the GBP USD, to want to take out its London high. But this could take out its London high, go into this inefficiency, and still the European dollar will not enter that 50% level. But it's reasonable to see two of them getting to that level. Okay, so if it does that, you watch consequent encroachment. Now if this gets overlapped, okay, this gets overlapped, plus you remember the 4 hour, there's that inefficiency. If this gets overlapped, then you expect this to get overlapped by body closure. If this consequent encroachment here at 1.05597 gets overlapped, then what will you wait for? You might want to take a shot to target this low. As this low gets taken out, you watch consequent encroachment. But even before it gets taken out, you'll be anticipating body to close below the midpoint of this. I just eyeball, let's say point 1.05380. Let's use an even figure. So 1.05380. If body close below that level, then you'll be saying, okay, then it might really want to go to the low at what? Remember, take the left top left corner of this chart. OH health here, the low is 1.05237. So that could be a sell. That's London sell side liquidity for Tuesday. And then if it does that, it can easily rally. And then this is the main thing I said before this week open on that video. This was actually Thursday still consequent encroachment. So I think this was where the Thursday was coming away in that Tuesday array. So this was Thursday consequent encroachment. If body close below it, then it might really want to go lower. So that's just my thought for price action. And for the Nasdaq also, it's still in the same condition, high resistance liquidity one. And I told you how this inefficiency should act. I told you how it should act. So everything still looks fine here. This low is taken out fine, but the low of this inefficiency hasn't been taken out yet. So everything still looks fine here on the Nasdaq. It was also a high resistance liquidity one throughout yesterday EM session. It wasn't doing so fine. It's moved, but it's just something compared to all what I've been doing before. It's not so. I spoke about this. So if you want more information about the indices, it's in that analysis. I also touched on ES, what I want to see on ES. Come on, ES. So this inefficiency, I told you I should act. I told you everything. I won't be talking much on that, and that will be all for this video. So you could, hopefully this helps you. Give it a thumbs up, subscribe for more, and that's what I'm looking at. You can use that information going into the close of this week. That's Wednesday, Thursday, Friday. Have a great trading week ahead and be safe until we speak again.